Talks of people shorting Palantir are getting a lot more common in the stock market space as Palantir's stock price continues to soar. The stock is up again today, and it's about to hit $140 a share as of recording this video. We'll see where it ends up, but yet again, another very strong day, which means Palantir shorts are down again on the day. There's a new ETF that came out. The ticker is PLTZ, and it's actually a 2x short Palantir. So it's the Defiance Daily Target 2x short Palantir ETF. Not only is it already down 22.95% as of recording this video since this ETF started trading publicly, but over the past 5 days, it's down 18%. And just today alone, it's down over 6%, which means as of recording this video, Palantir is up more than 3%. So the way this ETF works, if Palantir is up by 1%, then this ETF is going to be down by 2% on the same day. If Palantir is down 1%, this ETF is going to be up 2%. So it's going to move in the opposite direction, 2x of the move of Palantir stock. And so far, it is not working out well for investors. And on top of the negative 22% return they've gotten already, there's also a 1.29% expense ratio on this ETF, which, by the way, is ridiculously high for an expense ratio on an ETF. So I got some quick thoughts on shorting a stock like Palantir. But first, if you don't know, I'm a Palantir shareholder. It's my number one position in my entire portfolio. I'm up over 1,500% on the stock, and I plan to hold the stock for the next 10 years or more. Definitely one of the core holdings in my portfolio, and I want it to stay that way for a very long time. I am absolutely a Palantir bull, and I am long on Palantir. I also recognize that the valuation on Palantir right now is extremely high. I've made many videos talking about it and how I don't know if I would want to buy the stock if I didn't already have a position, if my time horizon was pretty short, like 1, 2, 3 years. I'm not sure we're going to get an amazing gain over that time. There are probably stocks in the stock market that are going to perform better than Palantir over that time. That said, I definitely don't think Palantir is going to have a rough time. I don't think Palantir is going to be down 20, 30, 40, 50% in a 1 to 3 year span. I think we'll probably be flat or up a little bit over that span if I had to guess based on the valuation right now. But would I short the stock? No, absolutely not. Shorting a stock like Palantir, a generational company that is absolutely redefining what we think of as AI software, that's a bad idea. This company has a real possibility of being one of the most important companies in the government sector and in the private sector over the next decade. To short a company like that is probably not a great idea. It's probably not going to work out well for you, and you're probably going to get ripped to pieces on that short. Is there a possibility you use it as a trading vehicle and you can make a little bit of gain here and there? Sure, some people are going to be able to make a gain while shorting Palantir. Some people using this PLTZ, the 2x inverse of Palantir, some people will get a gain using that instrument. But the high majority of people who choose to short these disruptive generational companies like Palantir are going to get burned bad. And I know a lot of people are shorting based on the valuation being extremely high with Palantir. If you don't know what the valuation is looking like on Palantir, I'll throw some metrics up on the screen for the PE, the price to sales, the PEG ratio. It's all very much elevated, and I get that. But you should not short on valuation alone, okay? The valuation can continue to be stretched, or the valuation can come down slowly over time as the fundamentals continue to improve. The more revenue they bring in, the lower their price to sales is going to be. Even if the stock price just stays flat and doesn't move down or up at all, the fundamentals are going to catch up to that share price. Shorting a company that has accelerating revenue growth, accelerating margin expansion, over 100% net income growth, over 100% operating income growth, that is a very bad idea. A company whose fundamentals are getting stronger each and every quarter. To short a company like that is probably not going to turn out well. Shorting on valuation alone is a bad idea. Shorting on weakening fundamentals, that can work out for people. I personally don't short very often at all, but those who do short and do well on it, they're looking for distressed companies that they can short, companies that are crumbling in terms of their fundamentals, the underlying fundamentals, the net income, the EPS, the operating income, the free cash flow, the balance sheet might be in a rough spot. Those type of companies, you might get a great percent gain on while shorting those type of companies. But when you're just shorting on valuation alone, that's not going to work out well the majority of the time. And it's an even worse idea to go even riskier and use this leveraged ETF that tries to go 2x short Palantir. probably not a good idea. Now, there's one way I could see that you could use this to your benefit, and it's actually for the long-term shareholder that has an extremely large Palantir position. So let's put it this way. If Palantir is about 50% of your portfolio or more, I know some people who have like 3 holdings, and Palantir is the high majority of that. That's not my situation specifically, but I know some people watching this video have an insanely large weight in their portfolio of Palantir, more than 50%. Someone that has a really high allocation that's a little worried that the stock price might see some dip, but they don't want to sell their shares, they can hedge a little bit using this PLTZ, the 2x inverse short. Because what happens is they're protected either way, okay? If they're long and they have a massive position and the stock price moves up a ton, then they make crazy money on that. But if they hold this PLTZ as well inside that same portfolio, if Palantir is coming down, then they're profiting on the other side of that, and they're hedging their losses a little bit in the short term, and they could take some profit on that 2x short Palantir, put it into more long shares in their Palantir position, and increase their allocation even more, kind of using this as a hedge. That's the only way I see this actually working out for anyone in a major way. So what's my plan with Palantir? I'm going to hold 100% of my shares straight up. I have a long position only. I have no short hedge on Palantir whatsoever at all, and I don't plan on opening one. But like I said, someone who has a massively large weight of Palantir and wants to hedge a little bit, this could be a tool that you use to hedge your Palantir position just a little bit, and you could offset your losses and actually potentially book some profits if Palantir drops in a major way while keeping your entire long position. Let me know what you think about this PLTZ in the comments below, and let me know if you plan to use this vehicle in any type of way. Are you just shorting Palantir straight up? Are you holding PLTZ, or are you staying away from shorts altogether? Let me know in the comments below. I'd love to hear about it. Definitely one of my favorite parts of posting here on YouTube is having some conversation with you guys down there. So go down there, let me know. I'm looking forward to seeing it. Thank you so much for being here. Have a great day.